Why oil prices are exactly where they should be. Next on the Energy Newsbeat weekly recap special.
What happened to the Strait of Hormuz and oil, Iran's threat to its global and its global impact? What will Iran retaliate? The United States strikes after their strikes on the nuclear program. Michael, here are the key bullet points. No leaks, total secrecy. Boy, that was phenomenal. Side note, no Democrats were notified before the execution of Operation Midnight Hammer. Holy smokes. Operation Midnight Hammer was meticulously planned. High U.S. risk military strike that inflicted significant damage on the nuclear facilities. It had 14 GBU 57 MOPs, big boy bombs, 24 Tomahawk missiles, and it marked a historic deployment of B-2 bombers and showcased the strike capacity. They don't know how the damage turned out so far, but the operation highlighted regional tensions. The B-2 bombers going to Guam did two things, Michael. It kept people guessing, but it also let China know that they're pre-positioning assets in case they attack Taiwan, and that was huge. On this, I put an unconfirmed photo of holy cow Batman moment of when one of those sites was attacked. Got some initial bomb things. But what I want to point out from an oil and gas perspective is the LNG flow and the Iranians. How are they going to respond? Michael, 90% of the Iranians' budget comes from their own oil that they ship to their primary customer, China. However, the Strait of Hormuz is also 20% of the world's oil flows through that strait, which is important to Oman, United Arab Emirates, and all of the other countries in the if it is shut down, we are going to have a significant world problem as far as finances go. So now the Iranian Congress agreed to go ahead and shut it down. But will they? They've threatened it 15 times in the past. This time, I don't know that they're going to. If they've only got rubber boats and rubber duck floaties, I don't know that they can.
Yeah, I'm a little bit with you on the standpoint of it's almost like breaking your foot to spite your broken arm. With the standpoint of, if they close the Strait of Hormuz, it's going to make them infinitely more difficult for them to actually get their oil, like you said, to China. Now, obviously, there are some things that they can do in the interim that can maybe stave that off. But, I think you brought up the accurate point that I would say they have threatened this in the past, and I don't think are actually going to follow through with it, because I think if they do follow through with it, it starts a chain reaction that begins really difficult to unwind. Yeah. And I think that was the game theory that Trump and, we saw the crew of them last night in the special address. You had Hegseth, Rubio, and Vance behind him. I think the game theory throughout the Trump administration that they're playing out is, we'll take these strikes. Iran won't go to closing the Strait of Hormuz because they understand that closing the Strait of Hormuz will go ahead and cut off their money flows, but also trigger a response from us, which then triggers another response to them and goes down in a spiral, sort of a spiral downward. And I think Iran deep down knows they're not going to win anything. Now, this is also extremely unnerving from the standpoint of we may, and I hope I'm wrong, but we may end up, if this ends up being a Franz Ferdinand style demarcation in the sand, which drags us into another global conflict, I think we'll look back on Saturday with, a lot more questions than I think we do now. I think, like you said, the reports coming out is this was as soft of a plan as we could have done in order to get these enrichment facilities. I mean, who knows if how close they actually were to a bomb. We've been hearing for 20 years that Iran was 3 weeks away from a bomb. So, there's a little part of me that is,
I'm skeptical.
But there's a little part of me that says, listen, isn't this the same playbook they ran in 2004? They just dusted it off. They're just dusting off the same weapons of mass destruction playbook to get us again? I don't know. But point of the matter is, I don't think they're going to close the Strait of Hormuz. I don't think we're going to see $100 oil. And if they do close it, I mean, it's going to be unbelievable. I mean, we'll know here very shortly. Here, the market's going to open very
Exactly.
soon.
But what I think that they will do is the 3 tankers that happened in the last 2 weeks that were caught on fire were from accidents from Jeep's interference that Iran was conducting on the side. So the tankers ran in and collided with each other. So they are still doing Jeep spoofing, doping, and zombieing of tankers because they're avoiding sanctions. So it is a real problem right through there.
Well, and I mean, let's dig into it just a little bit. So you've got about 20 million barrels of crude oil flow through that choke point every single day, which accounts for somewhere around 20% of the world's global consumption and about a third of the world's LNG. You have to think about this, Stu. Saudi Arabia, Iraq, UAE, Kuwait, Qatar, Iran rely on that strait to get their gas to market, and particularly the gas and the oil that flows to Asia, China, basically Asia, which includes China, India, Japan, South Korea, account for 67% of the strait's crude oil flows. And I think what China is probably back channeling to Iran right now to say, don't close this bad boy. Please don't. And I think they are probably signaling, we will support you in any way possible if you do not close this strait, because it affects them more than anything. I mean, 47% of all Iran's seaborne crude ends up in China.
There's only 2 things that really matter here. China has had 3 things. China has had 3 major military airlift machines in Tehran in the last week. Were they taking things out or were they dropping off? Kind of like Ghostbusters. And then you have, will Russia help out Iran? But I think that there is a gentleman's agreement between President Trump and President Putin, him saying, go take care of Ukraine and finish your business there and get a peace deal there. And President Trump is over here. So I don't think Russia is going to step in. But when we take a look at what the Iranian outgoing, and if the people rise up and they're tired of this horrible regime leading Iran, this is where if they want to go out and destroy any potential, they may be the ones to take out the strait. Not because of that. If they think they're on their way out and they just want to make it miserable for people, I think that may happen. Makes sense?
I think the game theory is very interesting. We will know very quickly, and it's going to have a reverberation on the economy.
Banks drop the climate pretense and follow the money, a shift back to fossil fuels. Michael, this one was really a fun one to write. And you take a look at the global energy landscape is undergoing a seismic shift, and major banks are making their moves clear. They want money back. They are for business profit. J.P. Morgan, Chase, Bank of America, and Citigroup are doubling down on the fossil fuel investments, prioritizing profits over climate pledges, according to the 2024 Banking on Climate Chaos report. Michael, they put in a $162 billion increase from 2023. This is critical. It's still short of the trillions that we need in order to meet just regular decline curves. However, this is a significant difference to the stories that we've had in the past. And I've got a interview that I'm getting lined up with the Bank of Oklahoma Senior Vice President of Investment for Oil and Gas Investing. He's going to be coming on the podcast real soon to be talking about this. So why the pivot? It's in economics. You got to be able to give money back. And in renewable energy, they're going broke because they're not renewable, they're not sustainable, and we're going to need oil. So this is a really huge one. But Michael, the EU, the European oil and gas, big oil, you have talked about this, you and I have talked about this. They've started going back to their basics and going back to oil and gas. But will the European banks follow the U.S. banks? I don't think so, because they're making money off carbon credits, carbon taxes, they're still in that rift range. So they're going to be behind the U.S. banks.
No, they're definitely going to be behind. And I think the part that I think you accurately put in this article is not only the shift from climate solar, wind, especially with these tax credits going out to oil and gas, but specifically the private oil and gas operators. That's where the capital is flowing right now. The capital is not flowing per se into the public companies. I mean, capital is not rushing into the oil business, at least over the last 6 months, because of the overall, what was the stated goal of the administration of $55 oil. But then they decided to get involved with Iran, and now all of a sudden oil's back up. There's some interesting stuff going on. Point of the matter is that even the capital that was flowing prior to this geopolitical craziness stuff, and I think what you have to do as an investor is you have to basically look at it from two angles. You have to look at the fundamentals and understand the geopolitics, because if Iran just rolls over, well, guess what? Oil is going to go back down to 65, back down to 60, because there's just that geopolitical premium baked in there. It's one of the reasons why listening to this show, I'm biased, but is so critical, because we break down and try to overview the difference of what's going on geopolitically that's going to affect oil and gas, but also then understanding that that the fundamentals are going on. The market is oversupplied right now. And the fact that Iran and Israel and the US are launching bombs at each other doesn't change the fact that we're in an oversupplied market. So what does that mean? It means that if you go back and look at where the capital is flowing, even in an oversupplied market, it'll tell you what the overall broader capital markets believe. And this goes back to my point of the capital was flowing, but it was flowing into the private oil and gas companies. I just saw today we're not going to cover it, but ExxonMobil had an opportunity to get a $1 billion investment from TPC Capital. I'll pull it up here, but point of that, but it was a 4% under their current stock price, and they rejected it. Now,
wow,
it's under their stock price. Why would you go ahead and accept that special offering, even if it was below your stock price? But it goes to show you where investors who do this for a living, professional investors, think of public equities. They think public equities are overvalued and felt like there was an opportunity to come in and get a stock for a slightly less premium. Okay. So yep. I think what you accurately pointed out in this is that what the banks are showing is that, hey, we're out on climate change and we're trying to move back into what's being profitable. And when you look at where that money is flowing, to be honest, in the last 3 months, we've seen 3 or 4 different oil and gas companies spring up funded by private equity. I mean, there's not a dearth of capital out there. It's the capital's being a little bit smarter about where it's going. So I think these are great articles. So I highly recommend everybody checking it out.
The Iran retaliatory strike on the U.S. airbase in Qatar, a page from the De-Escalation Playbook. On June 23rd, Iran launched a missile attack on the Al-Udeid airbase in Qatar, a key military hub in the Middle East, retaliation for U.S. airstrikes. The strike, described by Iran's military as devastating and powerful, sent ripples through the global markets, particularly in the energy sector. Yet nothing was hit. Rather than spiking, oil prices plummeted. It dropped 5% to $70 a barrel. And RBOB gasoline spots fell 3.5%. Why? The markets are reading this as a calculated move from Iran that follows a familiar de-escalation playbook with no immediate threat to the Strait of Hormuz, the world's most critical oil choke point. This is actually great news. We're very excited about it. We're expecting prices to kind of hover around the $68 to $72 for the WTI. Brent crude to be around the $72 to $76 range. But that's until demand really picks back up. And when it starts to pick back up, look out. We're going to go to the races then. But the geopolitical factor is now coming off of the premium for that kind of pricing. But proxy actions haven't been calculated in yet. And if there's any other disruptions, this is why it's going to be a little bit of a change. When you take a look at the calculated response I'm wondering when there's going to be a regime change in Iran. Are the people going to stand up? Because I don't think regime change is on the President Trump's agenda, which it shouldn't be. But hopefully the people will demand a regime change. So we can only hope and pray for the Iranian people that they don't do this. Let's also hope that the Israel takes heed and does not escalate anything else. Israel shuts down the Leviathan natural gas field, but this article covers an update on impacts and risk for customers in the regional markets. They have shut down the field a few days ago, but in Israel's energy ministry and infrastructure ordered the suspension of operations off the Leviathan and Karish gas fields earlier, citing that security risk tied to the ongoing Israeli-Iran conflict. The Israel energy infrastructure supplies roughly 40% of the country. Karish contributes another 20 to 25%. The fields were taken offline as a precautionary measure following the reports. Now, here's what's important. Impact on Egypt's fertilizer market. Egypt has got a direct pipeline into the field producing from Israel. Other affected markets are the petrochemical, Egypt, power generation, and LNG markets in the regional trade. So this is very important. I do not know when it's going to be coming back online, even though we had the encouraging strike in Qatar from Iran saying that they don't want to escalate things. However, we have seen the Iran strike a refinery already last week. So I don't think that they're going to be bringing it on anytime soon. As the situation unfolds, we will be tracking with that. President Trump, truth strategic shift. China can buy Iranian oil. I did not have this on my bingo card. This is amazing. President Trump announced on Truth Social, China can, quote, now buy and continue to purchase oil from Iran. Hopefully they'll be purchasing plenty from the U.S. also. Holy cow, Batman. This statement made on June 24th marks a significant departure from the Trump administration maximum pressure campaign reinstated in February. Michael, this is huge. And in this article, I added, how much do they actually buy and why is this significant? Let's look at this list. Iran, 1.4 million barrels per day. Russia, 2.1 million barrels per day. But notice 1.3 million of the Russian barrel is seaborne through the Dark Fleet and 0.8 million barrels is pipeline. Saudi Arabia, 1.7 million. Iraq, 1.1 million. UAE, 1.7. Angola, Oman, and some others. But that is a significant, holy cow, Batman pivot in this. Why and what does this mean to investors? I think that this is, we saw last week or in the last several weeks, OPEC really not able to bring extra supply to the market. When they said, okay, guys, go forth and drill more, they didn't. So this is huge. Maybe this is going to be a shift to get rid of the Dark Fleet. Great news for Iran getting the war over and for China. We may have some deals on the table.
Yeah, I think Trump is going back to the art of the deal. I think he understands the motive behind a lot of this stuff. I think he rightly understood that Iran, while they might threaten to close the Strait of Hormuz, will actually not do it for this specific reason right here. And I think this was probably part of the back-channeling negotiations that went down before all this happened. So I completely agree with you, Stuart.
This story, China plan for the Middle East crisis has stored oil. This, to me, was absolutely mind-boggling. In their energy mix, it's still the backbone coal, 55 to 60%. Oil is about 20% to the energy mix, with 74% consumption met through imports. That's a lot of oil that they import. Natural gas makes up 9% of the, that is coming from LNG. But anyway, let's get to the storage buffer here. China invested heavily in strategic commercial oil, not oral storage. That'd be a podcast host at that point. Oil storage to mitigate risk supplies is March 31st, 2025. Their SPR is 401 million barrels above ground with an additional 130 million underground. They evidently don't have Biden working for the CCP because he would have sold it off to get to a midterm. The commercial stocks of 668 million barrels above ground and total 1.18 to 1.4 billion barrels with 56% above. That's a lot of oil. And how long can it last? Got it calculated out here in there, basically about 4 to 5 months. That's not bad. You sit back and look at that, go, holy smokes, you can call China a lot of bad things, but they've planned for energy security.
Well, they think in 100-year cycles. And so I think they're accurately seeing that we need to make sure we have large storages for whatever comes. Is this I don't know if this is probably not a signal that they're going to invade anytime soon. It might be. It's eventually probably a plan for that if they get cut off, planning for things like this, any sort of tensions break out in the Middle East. So I completely agree with you. I mean, you talk about they're basically the 4.4 to 5.8 million barrels per day. Like you said, that's 203 to 206 days. They also have a bunch of alternative supplies. They get a bunch from Russia. They also have some domestic production. That's the other thing you have to note. China does have domestic production. They are not like Japan where they have nothing and they're fully imported. They can create domestic production, and I wouldn't necessarily be surprised to see if they go all in on that.
No, and the Siberia 2 pipeline has been negotiated. They're in the final stages of approval, and that is going to open up a whole new line of natural gas for China coming in. Woo! China's EV market is in turmoil. Holy smokes, Batman. I had a lot of fun writing this article. Michael, key points. Research. This is from Peter St. Jones. He's a PhD that I follow on X. He is one cool cat. Besides having my hairline, he is absolutely spot on. And so I took his information and I had an old article that I wrote around it. Research suggests China's car industry, especially EVs, facing severe downturn with about 400 of the 500 EV companies failing. Ruh-roh. Export data from 2025 is limited. So what I did is I went and got the 2024 data and took a look at it. Chery, I'd never heard of this car at all, had sold 1.1 million exports in 2024. BYD, I've heard of, and their cars are cool. They've got some really cool features in them, 440,000. But here's the thing, the implosion of China's car industry, particularly EVs, is a complex issue with significant domestic and international ramifications. The problem is they bomb out a market with really low prices, wipe out all their competition and have these predatory prices, and then nobody wants to do business with China. So we have the EU, Canada, and the UK looking to do business with China and have their car companies move over and do weaponization and creating in the military regime and putting their car manufacturers and moving them to their military stuff because of all the military spending that they've got to do. We're seeing some nutty things go on in the energy space around cars. I did not have any of that on my bingo card.
Yeah, I think the interesting part is that this price war is not just, I think people think, oh, it's just to do with the tariffs that the United States imposed. No, I mean, Europe has imposed a 38% tariff on all Chinese EVs, and you are now starting to see who the imposters are. I love that the comment that Peter Onsog said, he calls it the Lehman Brothers moment for China, and which I think is hilarious. I think the two companies from my perspective that I see making it through this, one is BYD. I think, yep. From a full self-driving standpoint, from a value standpoint, they will probably make it out of this. And then obviously Tesla has a strong presence in China, and
Right.
we're both bullish Tesla, so I have a strong reason to believe they will probably make it out.
Oh, you bet. And in fact, I believe Tesla. And I know some folks that are day trading Tesla and making a lot of money. So
what's going on, everybody? Welcome into a special edition of the Daily Energy Newsbeat Standup, our weekly recap edition here on this gorgeous June 28th, 2025. Absolutely incredible week. We're going to talk all about Iran, oil prices, where they're at, why they may be at their correct point, even when they're now down here at 65. An unbelievable week, guys. So much news. We're going to let you dive in real quick, guys. Check out the links in the description below. All links to the timestamps, links to the articles. Check us out, theenergynewsbeat.substack.com. Great place to support the show. We're going to be dropping our weekly and our monthly State of the Union for energy, available only for paid subscribers. So please, please, please check that out. And then, guys, thanks. Shout out to friends of the show, Reese Energy Consulting. Thank you for supporting the show. If you're in the midstream space and you're not working with an oil and gas marketing company, highly, highly recommend you call them ReeseEnergyConsulting.com. Tell them Energy Newsbeat sent you. Finally, guys, invest in oil.energynewsbeat.com. If you are interested in investing in oil and gas, highly recommend you fill out our portfolio survey, and we will go ahead and get you all the information if you qualify. That's invest in oil.energynewsbeat.com. With that, guys, we're going to go and turn it over to the team. We'll see you on Monday.